in general, there are a number of things that are likely to change and very often change when you've got expiring tax provisions and also a change in government at the individual level that are important background. But what we want to dig into here is we want to dig into the meaty ones, the big ones that either present opportunities for or challenges to the chance for individual tax mitigation. As you all know, this is our business and it's what we know really well. And it's why we assume many of you are here. And these four things on this slide really could have massive implications in the millions, tens, or hundreds of millions of dollars for individual taxpayers, depending on what kind of gets through Congress and how it's implemented. So we wanted to make sure we had time to touch on each of these. The first is the estate tax exemption. Peter, I'll give some context here, and then of course you'll dig into the implications. As I pointed out, and I'm sure almost all of you know, when an individual or a married couple gives money away in the US, they get to give a certain amount away completely tax-free. But any dollars that they give away over that limit, whatever that limit is, are subject to tax. The federal rate is 40%. Many states have their own estate or inheritance tax. Those add up potentially to a 52% tax on marginal dollars that you're giving away during your life and when you pass away. The current exemption is around $13.6 million per person, 27 million for a married couple. That's set to sunset at the end of 2025, as Peter pointed out, and would automatically drop down to the $7 million per person range. That would be a really, really big change for families between those two numbers, or families who expect to have somewhere between 7 and 14 or between 13 and $26 million during their lifetimes. So the big question, Peter, is what do the Republicans want here? What are they likely to pursue? And then, of course, what does it mean for individual families?
Yeah, they're very likely to try to extend the current law, which is the current 13.61 million, which is adjusted for inflation every year. The only scenario where that isn't extended is if things just fall apart and they can't pass a bill through Congress.
Expecting an extension, keeping the limit really right where it is now?
Yeah, I think it's going to be right where it is, and it's probably going to be extended through 2033 is my guess.
And so what that means for families, for married couples, they're still going to be able to give away $27 million or so free of estate tax, and anything above that would be subject to tax. If you were going to be under that $13 million limit, then if things stay the way they are, then there will be no change, right?
Yeah.
If you were expected to be over that limit during your lifetime or when you pass away, if your estate is going to be more than 13.6 million per person, you would have had to do planning before, and you'll still have to do that. We don't expect that number to go up. I guess one question that arises out of this, aside from which strategies you might want to think about pursuing, and we have a list there, and you can read more about that on our site. There's a question of timing, given that the extension is also likely to expire, and you never know what this exemption is going to be going forward. How should an individual who does expect to be, let's say someone expects to be somewhere between 10 and $15 million per individual, or 20 and 30 per married couple, and is young now and expects to live well past that next expiration date, are there things they should be doing today or thinking about today to get ahead of the next sunset?
Yeah, so I think if you're 40, chances are, if you live a normal life, the estate tax exemption is going to change 4 or 5 times over the course of your lifetime. And so it's hard to really predict where it's going to wind up in 2075. But I think it's always a good idea if you're pretty high net worth to make gifts to some extent. And the more high net worth you are, the more sense it makes. But it always makes sense to get assets out of your estate into trust for the benefit of your children or other loved ones. And the sooner you do that, usually the more efficient it is.
Yeah.
These assets tend to appreciate over time. And so if you can transfer assets when they're at lower values, that's more bang for the buck than transferring them years later when they're...
That's going to be true more or less, no matter what the exemption is. I think one interesting kind of result of this election, if the Democrats had won, there was talk of letting the current number expire and just leaving it at the 7 that it's going to revert to. I think that would have been a meaningful change in the sense that families that have $7 million or even $10 million today
Yeah.
look very different from families that have $25 million today, or that are going to have $40 million if the number goes up with inflation over the next 10 or 20 years. And so for the families that are at that low level, the Republican win may actually have a real large and meaningful effect, which is, you may not need to do any estate planning if you're going to have, let's say, $7-10 million in your estate. So I guess the question is, how do you think about if you're advising one of those
Yeah.
families that would have been subject to the estate tax if the number had come down? We don't know where the number is going to be in the future. Do you stand by the view that even those families should be doing things like crummy gifts,
Yeah.
or basic gifting, kind of no matter what?
Yeah. So if the current level is extended to 2033, there's about a 50% chance that it won't be extended beyond that. It just depends on who wins the 2032 election, I guess. And so, unless you're 90 years old and you think you're going to die in the next couple of years, I still think it makes sense to do some sort of hedging against future estate tax risk.
Yeah.
Just because, something like a crummy trust, which if you don't know is it's a trust that you create that uses your $18,000 per beneficiary annual exclusion. So it's just a way to get, $19,000 out of your estate in a trust for the benefit of your kids. I think a sort of like low difficulty, sort of inexpensive strategies like that make a lot of sense to hedge against future estate tax risk.
Yeah, that's right. We won't belabor this one too much, but just kind of a background context for everything that we're talking about here today is, of course, unsurprisingly, Valor can help with this. And so it's worth digging into these strategies, checking out our writing on estate tax. None of this is going away. And it's, as Peter said, a lot of this is low-hanging fruit and worth pursuing really from day one for most families. So if you've got questions, if you've got clients, or if you expect to be subject to these limitations during your lifetime, it's worth thinking about now. And of course, always potentially getting in touch with us.